Welcome back. You're watching Buy Now Sell Now on ET Now. We have our experts Kunal Bothra as well as Ashish Kapoor, and we will begin with the queries. But just a quick note for both of our experts: do keep your answers short because we have a curtailed time limit for queries today, and we try to take as many as possible. First one is coming in from Shailaja, and she's saying she's holding Alkane Amines from at the rate of around 4,233 rupees per share. Wants to know whether she should average or hold on to these counters or look to actually exit from them. What's your take on this one, Kunal? Alkane Amines, what should Shailaja do with this particular holding?
So I think you should hold. The stock is getting into a consolidation / correction phase, and I think it's coming back towards its 200-day moving average. 30 to 50 is the 200-day moving average. Assuming if the stock comes back to that level, say over the next month or so, I think that could be a good level where you can look to average further, because that would probably decide or indicate that the stock price trends or consolidations have ended. So I would suggest a hold, average at 200-day moving average, which at least at this point of time is at 30 to 50 levels.
Okay, all right. We've got the next question coming in from Kaushik Ghatak, who's asking for a mid-term view of Ashok Leyland. I'll come to you, Ashish, on this one. Commercial vehicle play, pure play commercial vehicle play. Would you suggest an entry at this price point for the next, for the medium term?
I think so. I think the problem with the auto sector has really been the shortage of chips, and so to that extent it has kind of underperformed in the very near term. But for an investor, clearly that is an opportunity, because it's the sector has relatively underperformed, and even Ashok Leyland hasn't done really anything much for the last many months. The semiconductor shortage, I think, would get over at some stage. And so there is a lot of pent-up demand both in the commercial as well as in the passenger car vehicles. In commercial vehicles especially, I think they would also get the advantage of the economic turnaround, which should happen once the COVID crisis is kind of getting over and economy is opening up. So on both counts, I think Ashok Leyland should be a very good opportunity for investors, and I think you should look at buying here.
Okay, staying with the auto space, this one is from Muthu Palani, and he wants to know what's your views on Bajaj Auto, Ashish. How does this particular counter look like? Do you think Muthu should look to invest in? If he hasn't, and if he has already invested, then should he stay put with Bajaj Auto?
Well, I think if he is invested, stay put, because again the same story here. The two-wheelers also are suffering, firstly because of the semiconductor shortage, and secondly also because of COVID. The demand has suffered, because usually a lot of two-wheeler demand comes when people are going to offices or people are going to colleges. So last about a year and a half, majority of the educational institutions and offices have remained closed. So that has kind of adversely affected the two-wheeler space. With this, I think, getting over, and we are all positive that within a few months, I think this situation would change. With people entering into the job market again, and offices opening up, and also institutions opening up, I think the demand would come back, and so to that extent, it's a good idea to stay. If you're already invested, to stay put with Bajaj Auto, and if you're not, then yes, use this correction to to buy into this stock, because clearly the domestic market, two-wheelers would, again, it's an underperforming sector, but we have historically seen that the demand here is very strong, and once it comes back, I think these stocks will get re-rated in a big way.
All right, I do want to point out that we're having a bit of an issue with the WhatsApp feed, and we're trying to resolve that. In the meanwhile, I'm taking questions from YouTube. Cheryl, I hope you forgive me. Sapna Samar is asking the next question. This is on the Bajaj twins. And Kunal, I'm coming to you on this one. They're under pressure in the session today. Sapna is looking for a buy price. Should she consider entering at these levels?
I would suggest to wait for maybe some more time. These stocks have just broken their key short-term support levels. I think indicator-wise as well, there could slightly be one more round of weakness which could come by for the Bajaj twins. So specifically, for example, for Bajaj Finance, I would suggest that if the stock comes back, say closer to 7,100 or 7,000 levels, that could be a good level where you can look to enter. And I think for Bajaj, FinServ as well, the levels on the downside could be almost closer to 16,000 mark or 16,250 odd level. So you can look to buy, but I would suggest waiting for maybe some more time till the time these levels come by for both of these stocks respectively.
Okay, this one is from Chaitanya, and this one also is for you, Kunal. He's saying he's bought Colte Patil as well as Prestige, both 5% higher than current market price. So he wants to know whether he should continue to hold on to both of these, given that what we are seeing in the real estate space. He wants to know, or should he look to switch to some other counters? His time frame is about 1 to 2 years.
See, I think if you have invested for 1 to 2 years, then small rallies of 4-5% into these names could should not be a point where you could look to book out profits. There is a bigger trend which is evolving into these real estate names. I think the likes of Godrej Properties, Oberoi Realties, Prestige, Colte Patil, DLF, etc. These stocks are looking very strong on charts. And also remember that in the last 1 month, these stocks have already gone through a correction of 15% on an average for these names individually. So I think that's also a good indication that the froth seems to be out, and you would probably see these stocks stabilizing and maturing back into an upward trending mode. So I would suggest a hold, specifically if your time frame is 1 year plus for both of these names.
All right, let's take another question. Affle is the counter that we're speaking about, and Anup Gowda is asking whether it can be bought at the current market price for the short term. Kunal, I'm coming back to you on the charts. How does it look? Can it be bought at the current level?
Well, it can be bought at current levels. In fact, what the stock is also showing right now on the charts, Alex, is a bullish golden crossover, which indicates that in technical terms, the 50-day moving average has crossed back above the 200-day moving average. Now, this generally happens when you see strong reversals and prices getting back into an upward trending mode. So I would suggest in that sense that it looks attractive, and the stock has come back to a mean reverting point as well. So both on the bullish golden crossover as well as the stock coming back towards a mean reverting zone should be a good level to enter.
All right, this one is coming in from Syed, and he's saying that he's bought SRF at 2300 levels. He wants to know whether the charts are showing an upward momentum for this counter, or is a downward momentum. Which one is that, Kunal? Would you be able to help Syed with SRF?
Change for SRF, was I remember answering this query I think last week as well, when someone had queried that SRF could be a good long-term buy. I specifically mentioned that I think the stock is getting into a short-term corrective way. The MACD, for example, has converged on the downside. You're seeing the stock just hanging around the 50-day moving average, which I believe over the near term should be broken down. So I think a better entry point for SRF should be on the lower side. At least wait for another 5% correction, if not more, for SRF. That could probably take the stock closer to 1750 odd levels. So I would suggest a wait on SRF. Don't need to jump in at current levels. Wait for another 5% correction. That could be a better level to try and chip into the stock.
Next question on PVR. We've got Padma Balan, who's got this counter at levels of 1510. Should you hold or switch for the medium term is the question. Ashish, can you hear me?
Yeah, okay, I can hear you. Yeah, I didn't. Okay. So PVR, I think the stock has run up a lot. I mean, it's really gone way ahead of, I think, the fundamentals. We are not bullish at all at this stage, and I think, frankly speaking, there are better bets available. Within the cinema exhibition space, also Inox Leisure presents a better opportunity and better valuation at the current price to trade in. So if he really has to remain in this cinema exhibition space, then also I think Inox Leisure presents a better opportunity.
Okay, this one is coming from Ramalinga, and he's saying a year ago he bought about 50 shares of Bandhan Bank at 350 rupees per share for with a 3-year horizon. He's saying 1 year has passed, but I'm in huge loss now. He wants to know how did the fundamental change for Bandhan Bank. Now he only has 2 years of his investment of the holding for Bandhan Bank. So what should he do? What's your take, Ashish? What has actually changed for Bandhan Bank? Ramalinga Raju invested about 50 shares at 350 rupees per share with a 3-year horizon. More 2 years to go. What should he do with Bandhan Bank?
Well, actually, nothing has changed. In fact, I think as we are progressing, things are improving, and even for Bandhan Bank, I think things will look better. There was a lot of fear of NPAs. To some extent, they have really got removed now with the economy coming back and with the commercial activity picking up. I think the smaller banks, whether it was Bandhan or whether it was RBL or whether it was IDFC first, there was a huge apprehension, and that's why the stocks really get into a corrective phase. 350 really looks quite high because I think you somehow managed to maybe get a peak at some level. But if you have 2 more years, I think stay invested. You will certainly get much better. I don't know whether it will cross your purchase price. Difficult to say, but definitely it will improve from here. Next 2 years, I think the corporate-facing banks look very interesting space. So stay invested. Certainly, you will get a much better rate than the current one in the next 2 years.
And on that note, we're at the end of this edition of the Query segment. Thank you so much for taking the time. And Ashish, wish you and your family a very, very happy Diwali. Kunal, we'll be seeing you more often. So we'll hold on to the wishes for just a while. Let's focus in on earnings. CARE Ratings is the counter that we want to focus in on, and the company has reported a total income that was lower by about 1.9% on a year-on-year basis, more or less flat at 82.3 crore rupees, and the PAT was lower by about 25% on a year-on-year basis to 27 crore rupees. There has been an improvement that the company has reported in the quality of rated entities. We're joined by the management, Ajay Mahajan, who's the Managing Director and Chief Executive Officer of CARE Ratings, joining in. Thank you so much, Mr. Mahajan, for taking the time. Could you give us a sense of how you saw Q2? Is there an improvement on the operational front? And also give us a sense of what stood out as the key highlight.
Yeah, thank you. Thank you firstly for having me, Alex. Well, I think this has been a catch-up quarter in many ways to basically our overall performance for the first half is what I would like to focus the attention of the viewers on. Our first half operating revenues are up 6%. So we are reasonably happy with what we've been able to achieve, given that the credit growth environment in the country remains quite muted. As you know, the credit to industry between April and August of 2021 actually contracted by 1.6%. So against that environment, as you can understand, rating agencies really thrive on credit disbursements by the banking and non-banking systems. And if credit is contracting and we are up 6%, we are modestly happy with our performance on the revenue front. On the expenses, and therefore resultantly the impact on the PAT is a little adverse because we have been saying this now for almost the last 1.5 years, that CARE is firmly on a transformative path, and process of transformation requires investments in technology, investments in people, investments in group approach, investments in rebranding. So we are focusing a little bit there. And obviously with regard to employee costs, we have seen a little bit of modest increase in salaries, and some ESOP costs have gone up. So as a result, PAT may be a bit down, but we are very encouraged by our top line performance. Our subsidiaries are also doing reasonably well. They have grown decently by about 33% corresponding quarter, Q2, or corresponding actually first half of last year. We've grown about 33% in our top line in subsidiaries. They're still very small, but we are very confident that we will grow these subsidiaries to a good 30-35% of our total revenues over the next few years.
Okay, I'm just trying to get a picture, Mr. Mahajan, on the credit space, and because this is something that will directly impact how your business goes as well, there'll be higher demand for ratings by corporates. Is that picture changing? Is it improving? My understanding is that corporate bond issuances in the first half were a little subdued, but I think there is a movement on the shorter end of the spectrum, more commercial papers being issued. What's the outlook in the second half? Do you see that picking up substantially?
That's a very good question, Alex. And I tell you, we have been holding our breath on seeing a little bit of turnaround in credit